Yeah. All right. So this recording has now been started, meaning this webinar is being recorded. For those that leave early or join late, it will be uploaded later this evening onto our Trade Ideas YouTube webpage. To start the session off, usually like to get a little bit of a feel of who's in the audience. So I'm going to do a poll real quick. And if you would, please participate in the poll. The first question is very basic. Are you a Trade Ideas subscriber? So I'll wait until we get like a 2/3 quorum on that. And let's see who's attending the webinar today, if you would. All right, we're getting to quorum pretty quickly. I'll leave it open for another 5 or 10 seconds. Appreciate the participation from you all. All right, let me go ahead and close that and share that. So looks like a bit of a majority have an active subscription. Usually it's around 50-50. So today it's more like 2/3 has a subscription, 1/3 is kicking the tires and trying to learn more about our cool product. Well, I can tell you, you will learn more about our cool product over the next hour. And at the end of the hour, I will give out a promo code for anybody that's a new user to reward you for tuning in, and it will give you 15% off your first month or your first year of Trade Ideas. Real quick, one more question poll, if I could, and this is only to the current Trade Ideas subscribers, and that question is, if you're currently subscribed, are you a premium member, meaning do you have access to the AI, or are you using the regular standard version without the AI and out the back testing and the price alerts? All right, I'll leave that open for a little bit longer. I want to get a better sample. All right, very good. Let me close that poll. And this one is, again, pretty close, but let me share. The majority of the people that are users of Trade Ideas have the premium version. So it's at 60-40 in this particular audience. So there you go, guys. If that helps shape any of your content, let me go ahead and hide that poll. And now let's go back to Andy's slide and just pop that in present mode, which I believe, yeah, there we go. And again, this is being recorded. There is a questions box you can detach. Let me just quickly check the questions box and make sure. All right, so I normally would ask for feedback on audio and visual, but we're getting some good people who know the drill. Thank you, Neil, Gary, and Terry, and Christopher. I'm going to turn it over to Andy, and you guys have this question box at will. We'll do our best to keep up, but if you can save your questions as we get more towards the end, that usually helps us out. So without further ado, hello, Andy.
Hey, Steve. How's it going again?
Good.
Hey, Jamie. How are you, buddy?
Hey, how's it going with you again, Andy? I'm fine still over here.
All right. Yeah, you got to text us just in time.
It's been a long, interesting week, has it not?
Yeah, it has. It has. Crazy market, huh? What a zombie market, I believe Steve likes to call it. But anyway, guys, thank you for taking time out of your day and joining us here. We have some good stuff to chat with you about and to present for you. But first, let's take care of the lawyers and the legal issues here. Once again, guys, this webinar is for educational purposes only, okay? We're going to have some fun in here, but nothing that you see or hear should be construed as investment advice. Even though at one time, Jamie and I were both licensed. Probably, Jamie, you like me, you let your license lapse over the years. And so now we're just educators with this incredible software. And of course, we still dabble in the markets and have fun, long-time traders. But once again, if you are seeking advice for investment, you need to look for a registered broker, RIA or something like that. But let's move forward. And Jamie, do you still have your license? Just want to make sure.
You know, I've had just about every license out there, Andy.
Yeah,
right now, I do not have any current licenses. No.
Okay, same here. Yep, I let mine lapse. But all right, guys, just want to let you know this is a very powerful software, but it is intuitive, but it does take some training, it takes some education and support, and you have 5-star support, education, and training here at Trade Ideas. We really pride ourselves on bringing you on board. The Traders Room, I'm sure most of you in here have heard of it and have been in there. If you're new to Trade Ideas, you're in here for the first time, maybe kicking the tires, we offer a daily trading room that is moderated by a very good trader and orator, and Barry Honorson. He does an incredible job in there. It's free. Get in there and check it out. Watch him trade live as he navigates the market using our software. We have 4 webinars a week, all in the 5 o'clock Eastern time slot. You're usually going to find myself, Jamie, or Steve. We're going to be in 3 of us, all paired up differently at the time. You can see it there on the board. I won't go through each one. And on Wednesday, we do throw a little slider at you with our CEO, Dan Merkin, and Brad Williams, our CTO. So that's a great place to go and kind of demo the product and ask your questions. As well in here, we welcome all your questions. We will ask you maybe to maybe look toward the latter quarter of the webinar to start dropping them in the box. So a Friday support session. We're going to have another one tomorrow. This is 11 a.m. to 2 p.m. Eastern time. A great place to come, even if you're not a subscriber to Trade Ideas and you want to learn more. You have to remember we have both people who have been with Trade Ideas a long time and using our product a long time that come to these webinars, as well as the new people. So it's hard for us to spend a whole lot of time, either on advanced stuff or on beginner stuff. So we try to kind of mix it up in here for you guys. But anything you want to learn, no matter how basic it is, come to that Friday support session. That's a great place. It's 3 hours long, and we will cover anything in there. All right. Real quickly, if you subscribe to Trade Ideas, you get a one-on-one training. This is what we call the Hour of Power. You can come in and spend 1 hour with myself, Jamie, or Steve, and it's great because what we do here is we take the product and we specialize this 1 hour for you. So if you just now hard to get a grasp of the product and you're having a hard time, we can start with the very basics. Or I'll tell you, a lot of times lately, I've had people come in and wow, they know the product really good, and we're able to take this to different levels, to more advanced stuff. And not only that, we're able to take it down trading. All of us have traded for years, so we can help you with your trading as well. So it can be some great coaching along with education of the software. All right, real quickly on our Brokerage Plus, we do have a module that if you want to automate your trading, we can do that with interactive brokers. Okay, you do have to have a premium subscription. It's in its beta phase, so it's free for now, and you will be grandfathered in. After that, there will be a one-time fee. But this is for taking your own strategies to the next level and actually automating them, where if you wanted to, you could turn your back and walk away and let the machine work for you. This is for, advanced traders only. If you want more information about that, go to trade-ideas.com/beta, right there at the bottom. Okay, agenda for today. We're going to talk about the market recap. There's much more to talk about. Just when you think this market may be rolling over, man, what an incredible, well, time will tell what happens, and we'll get to that here in a minute. We're going to go over the Holly recap. Some really good trades. We're going to highlight 4 of them today that were just incredible, kind of no-pain trades. You get in them. Maybe you put a stop or something that alerts you if the price is hit, and you let them work for you. There was some really good potential today in those 4 symbols that you see up there. I'm going to share with you a scan, and this is more of a kind of a nightly scan. I call it Opportunity Knocks because it's a way for you to create your own opportunity, looking at stuff in the after hours. And nothing that really breaks down certain stock formation or anything like that. This is just a way to look at stocks and look where they are in their ranges, and also look at the fundamentals of them. I'll share with that. Then we're of course open for questions here at the end. So let me back out of this and let's pull out the old spider chart. Spider referring to the ETF SPY. Okay, we use this as kind of the benchmark. This is what a lot of, I shouldn't say a lot, all your hedge funds and your mutual funds are kind of always weighed against. It's comprised of 500 of the most liquid and higher cap stocks. They have to meet certain criteria to get into the S&P 500. So anyway, here we are, guys. This is a long-term trend line that we kind of looked like. We talked about this. We broke down from it, and now we have recovered. So when you have action like that, what you really need to do is what I do is just go ahead and just remove this trend line, because you have new data points now. And when you have new data points, of course, that's going to create new trends. So maybe I will do this probably for the next, I'll see what happens in the next pullback. But I need to find me a new trend line. It's pretty sloppy right now that one's been broken and recovered. But anyway, once it's broken, you have to draw new trend lines. Very impressive move today. The last 3 days in the spiders as we go into the non-farm payrolls tomorrow. Be interested to see what happens. We're staged. I think the Qs actually went and took out highs today. We'll look here in a minute to see if they held that high. But nonetheless, the spiders are really close. Here's a level up here. We can mark this up, see what happens tomorrow. You do have that really wick up there, so I'm not one to just exclude that. So I'll just have to take that up to the high of that wick, because that would be the intraday high, not the closing high. Now the closing high looks like it would be just the day before that right there. But nonetheless, yeah, it's there's no downward sloping trend as we look at the Qs. Steve and I on Tuesday, we talked about the Qs maybe running into this trend. I'm not going to draw it, but just imagine this trend going right like this. Well, we just shot right through it yesterday, and we do have a new all-time closing high on the Qs. Once again, just incredible action. Not real volume, but once again, it would be interesting to me. I'm not real. I have to agree with Steve. I'm kind of getting somewhat bearish, but I'm interested to see if there's any follow through. Very little follow through on this break over here. Okay, because one would argue, you take out these, you want to see several days moving higher. This was not a very big move higher, and then it broke down. So I want to see if it can explode from this area and push higher instead of coming back, because it comes back to me. For me, if it comes back and I start seeing some of this more volume on the downside, we could still have distribution. Distribution doesn't take place overnight or a couple of days of trading. Distribution can take several months. So if you continue to see these downdrafts in huge volume, even though they're recovered, but recovered with very little to go through and press on to new highs, in other words, just only doing it for a few days and coming right back into the range, I will still be red flagging this market, because as long as I see us really not going anywhere and just coming back, into this range, and once again the lower day being followed, with huge volume, I am still very skeptical. Yes, a lot of more deterioration would have to be done for me to, be real bearish on this market. Gosh, it's been going on forever. No major trends have been broken. It's still a bullish tape. Still a bullish chart, but time will tell, if these distribution days continue. Okay, so I will be keeping an eye on that. Real quickly with the diamonds, I think they look very much like the spiders. Not a whole lot there. A doji day there today. I don't like spending a whole lot of time on them. I don't like spending a whole lot of time on IWM, because it just really hasn't done anything but head fake over the last almost year. Just keeps going to highs, falling, going to highs, falling, several times. It just, so interesting, nice move, but nothing there. Qs are definitely showing the leadership right now. So, Jamie, is there anything else that you would like to add to the market recap here?
Pretty much, I concur with what you're saying there, Andy. I mean, we did expend quite a bit of energy over the past 3 days getting back up to this level. Of course, tomorrow's Friday, barring any extracurricular events, nobody goes shooting missiles over Japan or anything like that. Who knows what we'll see tomorrow, but we'll all have a front row seat.
Right. Yeah, it's interesting. It's a bull market that just it won't die, but we'll see. The spiders. I think the spiders are pretty much flat for the month. So if we pull this up, and yeah, you can see here, right here is kind of where we opened up, and pretty much the same place as where we closed. I'll draw this real quick and then remove it. So pretty much flat on the market. So even though an impressive last 3 days, we really didn't go anywhere in the spiders this month. So time will tell. Time will tell. But I will be keeping it. Go ahead, Jamie.
I was just going to say, how do you like the timing of this? Hey, August is just about to close out, and then we've got the holiday, right?
Yeah.
Okay.
I know.
And then, boom, there we are in September, and we all know things tend to heat up in September. And just coincidentally, it's looking like the SPY might be right back up there at all-time highs, nestling up against it tomorrow, or maybe even through it by the time the day is over, or maybe smacks its head and reverses. But hey, sure did line up perfectly with the close of the fall. That's the point I'm making here. Does it mean anything? No, it's just an observation.
Yeah, it's a good point. Good point. Time will tell. Time will tell. I know we got the debt ceiling, coming up, and that could end up being a scare to the market for sure.
Oh, is that the thing they raise every time?
Yeah.
Well, in other words, you could say, hey, we're out of credit. You're going to have to raise our credit line again. But if they want to use the term debt ceiling, sounds a little bit more, palpable.
Yeah. Well, this can't go on forever, because just like individuals, when you get to a certain point where the creditors are going to say, okay, no more. You borrowed enough. So we'll see what happens. But anyway. We won't get into the politics of things.
Quantitative easing. We don't want to go down the rabbit hole.
Yeah, exactly. Now we won't go there. All right, so that's the market recap, and now let's. I'm going to hand it over to Jamie. We're going to talk a little bit about the Holly. Holly had some good moves today. I was a little bit nervous today. Before he gets into it, I'm going to give him my little synopsis of what I see in Holly today. She got off to a rough start this morning. I was thinking, oh boy, here we go. We have another gap up, in our first 2 trades were losing trades. But then you can see there on the risk on histogram, provided a lot of alpha, almost up to 460 there in the histogram. And really, it would have, I know it's a big if, but when I look down here and I see just one stock after she got out risk off, just really killed the risk on by $1.34, or it would have been much more respectable today. But you know what? That's risk off and risk on for you. But nonetheless, some really good opportunity today in Holly. Risk on finished up. Okay. All right, Jamie. Would you like me to go over a couple, or do you want somebody to go ahead and pass it to you now? It doesn't.
Yeah, go ahead and pass it. Go ahead and
okay.
pass
Yeah.
it. Let me. A couple of little metrics I want to hash over before we get into Holly, if that's okay.
Oh, so okay. So pass it over now.
Sure.
Okay. All right. You should be getting the baton. Are you talking, Jamie?
Sorry about that.
Oh.
You would think that after a gazillion times I would know when my mute button is pressed, but
No problem.
Okay, you do have eyes on my screen, correct?
I do.
All right. So obviously Holly was very active today. We can see the strategies that she came to the show with today. Let's count them up here: 2, 3, 4, 5, 6, 7, 8, 9, 10, and 11. All of them were long, except for these 2 shorts. And of course, They are the ones that did not fire anything along with got dough. These guys down here were all zero trades, did not trigger. And then, you know, as far as Holly's trades here, we can see there were quite a few on the blotter today. One of the more lengthy trade blotters that I've seen Holly have in quite a while. Mm-hmm. But I can honestly tell you, I was not surprised to see all of these longs come cranking out of here. Because as we always like to, you know, the main theme here about the market is we got to stick to our rule set, but we always have to constantly temper the expectations that we have. You know, in other words, I live a half a mile from the beach. If I was going to go surf, I would first check the wave report. I would see what the waves were doing. Are they coming in at 1 foot? In which case, I'm not going to waste my time. But if they're coming over 3, 4 feet, double overhead, whatever, you know, then a surfer would want to go surf those waves. Surfer doesn't want to go out and waste his time surfing 1 foot waves, expending a lot of energy for not much fun. Okay, so give me 1 second, ladies and gentlemen. A little noise pollution. Let me deal with it. All right, ladies and gentlemen, I appreciate you being patient. I had a unwelcome solicitor, which I had to dispatch. But anyway, moving right along with Holly here, I was not surprised to see all these trades coming out because my expectations, getting back to the surfing analogy, when I looked at my compare count windows today, I knew exactly what the waves were coming in like, and they were coming in pretty large, very surfable waves. Now, for those of you who attend on a regular basis, you know what you're looking at here. We're looking at the compare count windows that I monitor after the first 15 to 20 minutes of every trading session. So in short order here, without going into the configurations here and eating up a whole lot of time, what are these windows doing? They are programmed, and let's focus on these two guys over here, which are the stocks capitalized over 4 billion and then taking it one step further, capitalized over 5.4 billion here. So these two represent the bigger cap stocks, the things that have been leading the charge in this entire bull market. So after the first 20 minutes, I saw readings of 61 and 62% respectively. Now, once we get over 60%, ladies and gentlemen, or even approaching it, that means that there's something brewing underneath to the tune of what we saw today, the type of magnitude. Now,
hey, Jamie?
Yes.
I just want to say real quick, would you tell them what, and just a kind of refresher in case anybody's new in here, maybe what this is actually gauging? Is it new highs versus new lows? Is it?
Yeah.
Okay.
Absolutely. Okay. So in essence, institutional volume is a big driving force in the market. Now, on any given day, there's only a certain percentage of stocks that are being accumulated or purchased by the institutions or sold, right? Fund calls up their guy and says, I need to get out of 1 million shares of stock XYZ. Well, obviously they can't just dump it. That has too much market impact. There's also this little thing called VWAP, volume weighted average price, which, guess what? Institutional traders that are responsible for getting a large client into a position or out of a position, they get graded. And if they get their client out, says I got to get out of 1 million shares of IBM, and they get him out under VWAP, where most of the stock traded today, he's probably going to get fired. He gets him out above VWAP, he gets a bonus, he gets him out right at VWAP, well, he's just your average guy, right? But the bottom line is this. A large portion of those orders, and large is relative here, maybe it's a quarter of the order, maybe it's a tenth, this depends. If that stock has tremendous buy or sell pressure on it, a big portion will get done in the opening 5, 10, 15 minutes. Then they got to slice and dice the rest of it all day and try not to impact the market, well, with minimal market impact, I should say, okay? So in essence, these windows are using new high, new low with accelerated 1 minute volume, and I will give you a peek at the configuration just instead of explaining it, trying to get you to imagine it. But in essence, what we're doing with these windows is we're taking, or we're tracking where the institutional volume is going. Where the big boy is going to be playing today, and is it to the buy side, or is it to the sell side? So I hope that makes sense thus far.
It does. It does.
And when we take one of these guys, of course, this is the one looking at stocks under 2 billion, but the configuration is exactly the same. On the green data side, simple, stocks hitting a new high. Can't be capitalized over 2 billion. And this is the little guy that really does the majority of the work in this case. Volume on the 1 minute period has to be a minimum of 3 times or higher. Same exact thing is appropriate or is installed for the downside, except we're looking at new low. So some of you may be aware of this metric. It's been around for ages. It's called the tick. NYSE metric looks at advancers versus decliners as a whole. But you're getting everything in the kitchen sink. Things you would never even attempt to trade because of spreads and liquidity. Well, here I've created a very custom version of a tick. This is the thing that I want to track. So imagine the hunter tracking the animal in the wilderness. You and me, we'd look down and we go, I don't see anything. But the trained tracker goes, oh, you didn't see this broken twig, or you didn't see this partial footprint here, and you didn't see this little piece of fur rubbed off against a bush up here, because we're not trained to see that. But he could track that animal until he found it. Well, I'm employing the same type of strategy here. I'm looking for what's going on underneath the surface in the first 15 to 20 minutes to try to temper my expectations on how aggressive or how, conservative I should be on any given day. Now, once again, we've got simple metrics here, but hey, sometimes simple is the best alternative. Now, having said that, on a typical day, if we see less than 55% one way or the other, then the bias is to that side, but you're going to have to mind your P's and Q's. You're going to have to be very selective, which is most trading days. When you see metrics above 55% one way or the other, 56, 57, 58, that lets you know there's going to be a little bit more oomph, or what we could call follow through. But when you get up to 59 and you start getting over 60, we've had quite a few of those days back to back here, but we've been in very interesting circumstances as we've just basically, used this bottom level here as a springboard and got 3 consecutive days up here. But, a lot of people might have had, hesitation. They're like, we're getting, we've had so much upside potential here, and now we're coming into this third day, and what goes up must come down. But guess what? The metrics this morning told me, hey, not only is it a big buying bias by the institutions from what I've tracked in the first 15 to 20 minutes, but it's a pretty significant one. And so Holly agreed. Holly saw lots of statistical opportunity. Now, as we can see here, we took a little drawdown, which this is pretty common behavior a lot of the time. Take a little drawdown before things start catching. But the bottom line is, if we take a look at the SPY alone, let's just count it off here, 20 minutes. These are 5-minute candles, 5, 10, 15, 20. So we get the little, hey, wink, wink, nudge, nudge from our compare count windows right here that, well, nothing's guaranteed, but it sure is feeling like the overall draft today could potentially be on the upside. And then we saw what happened in the short term, a little pullback, wicky wick right here, and then whoosh, off to the races from that point on. So, once again, and for those of you who are here regularly, those of you who are here new, now this keeps happening day in, day out. Is it a foolproof system? No, there's nothing of the sorts out there. But I can tell you this, It's been pretty freaking accurate for a very long time now. Learning what our expectations or tempering our expectations is very crucial, whether you're a veteran trader or somebody just getting started. And of course, there's lots of things to complicate matters out there, but this is one of the methods that, you know, is it going to work tomorrow? I hope so, and we're going to find out. We'll see. But it's just a very simple and effective way to temper your expectations on every session. You know, sometimes this can, you know, result in some good trades just from the SPY alone, but it helps you know how much oomph, how much finishes they're going to be. And for example, on my tickers that I had today, there were just, this thing was nonstop on stocks like Court today, where we had nice clean range breaks and big time continuations, second opportunities to add to the position, and stocks, you know, hitting pretty absurd levels before pulling back today. On the same token, Holly was just full of goodness. You know, when you look at this EXEL trade, man, Holly calls it right here. We get a little oomph. Of course, Holly's not real good at exiting, so she was in that trade for what? Not even 2 minutes, 6:46 to 6:48. She gets a little nervous with these wicks. She takes her 8 cents. Perfect example of a risk-on trade. Hey, I see Holly getting out. Don't really see any reason for me to get out. Hasn't come anywhere close to the stop loss. Okay, I know from attending these webinars and hearing Jamie and Steve and Andy talk about this stuff all the time, Holly's not real good at exiting. We just had to give her a mechanism to prevent her from letting a winner turn into a loser. That's when profit, save, and reduce risk were invented, along with the other 3 reasons why she can get out, which is a stop loss, a profit target, or a timed hold. So the goal in having risk off and risk on, this is Holly playing by her rules. By the way, she's not real good at getting out. This is what happened if you stayed in the trade. But the name of the game here is just get something in between here. Maybe you got 15 cents, maybe you got 20 cents. Maybe you bought 200 with Holly and you're like, wow, she's getting out already? Well, I'll get out a half and I hold the rest. You still did very well on that position. So there's many examples of trade arounds, or excuse me, risk on today. There's not really a whole lot of trade arounds where she gets stopped out or takes a reduced risk and then goes back through that level. I mean, RAVN, technically from a textbook standpoint, yeah, we got through the level. We came back down. She gets out prematurely, stop loss not hit. But once again, that's her, in essence, a trailing stop or to the reverse side. And then it comes back through and gives a little bit more. But nothing to write home about there. We'll do one more trade or one more risk on here on this RXDX. Once again, here's the level that Holly says buy. We get into it. Holly stays in the trade, this time a whopping 8 minutes. And of course, the shaded area here is her being in the trade risk off. But, you know, call me crazy, Andy. But if we're in this candle right here and we're just getting this slow grind up, there's really no reason to get out of the trade. We go risk on, we see Holly getting out, we're like, okay, whether we peel out a half and keep the other half, or whether we keep the whole position for risk on, doesn't really matter.
Mm-hmm. Oh, and Jamie, maybe on both those two, show the dailies, because we always talk about, when I do my sessions and I'm showing people charts and how to trust it. Look at that XL, just a nice little stock that's been trending up for a very long time, going sideways for a while, and then breaking out of that high right there where he's marking up. Boom. That's what you. Yeah, that's beautiful, guys. That's textbook.
Yeah.
Blue skies, nothing left. Yeah.
And even taking that one step further, you know, 5, 10, 15, pretty early call for Holly, 20 minutes in, right? Okay, let's say we banged into a couple of 100, whatever. Time passes, everybody's happy because we're green. Take a little pullback, nestle back up here. Now, once it puts in this high, it's always a really good idea to get in this habit. I'm going to draw a line. I'm going to create a range, all right? And look what we have happening here. Buyers and sellers slowly become equal, creep right back up to that line without expending too much energy. Boom. That's also another really good signal there. An intraday range break with a nice tight run up to the entry point. Guess what? This, hey, it looks just like this, doesn't it? This looks just like this.
Mm-hmm.
So this right here, we get a statistically weighted entry. Then we get a nice little consolidation. Then our human mind goes, oh, that's a real nice range break. Happens to be one of my favorite patterns. I think I'm going to go ahead and bang into another 100 right here, assuming the volume is semi-decent. And then we've got a fractal pattern occurring here for another entry, and the same pattern occurring on the daily with blue sky and no resistance. So yet another way, and I'm glad you brought that up, Andy, to temper our expectations versus, you know, let's pick something that was, this one was also popping out. Well, but nope. See, I was like, RXDX wasn't at all-time highs, and of course, it looks good right here, exhibiting the same pattern, but we do have some congestion to deal with back here. Now, you know, where is the magic spot here? Don't know. Could be any one of these areas below here, at the tops of these guys, but the bottom line is, once we see that, you know, hey, no wonder it wicked real quick off the top here, because it was banging its head, not only here, but we have other things to contend with back here. Mm-hmm. Not so in EXEL.
Yeah.
Which makes me wonder for a second, Andy, is the, I don't think, let's see. No, Sunrise Mover doesn't have a, that tells me the filter for Sunrise Mover isn't necessarily demanding that they be out. That one just happened to be that way, because when we look at RY produced by the same strategy, not the case. This one just happened to be there as well.
Yeah.
But what I did here is, let's see, where did my max profit column go? I think I accidentally had to restart, but I always like to show this, and today's no exception. On this amount of trades. Okay. Did I just think I put that column on there? Oh, here we go. So max profit is the most she was up in risk off mode. Of course, we had our losers down here, 18 and 25 cents respectively. And then, you know, here's where the, you know, how much was she in the money on any of these positions? Which, yeah, 1, 2, 3, and 4 cents does not a trade make. Well, it can, but for most people, we need to make a little bit more. There's this thing called commission that we have to overcome. But, you know, didn't get in the money here, but just the fact that the remainder of these trades were in the money at some point is a big, big statistic. I mean, any person sitting out there in the chair a long time, rookie, anywhere in between, try putting on this many executions and being at the liberty of punching out for a profit. Easier, much, much easier said than done. So, you know, I've found myself going back to this soapbox over and over again with my training sessions and going, well, you know, yeah, I understand that you like MACD and I understand that you like RSI, but we've got statistical probability here on our side. And, you know, I can't really emphasize that enough. Holly is coming to us after doing mountains of statistical analysis, back testing, and optimization, as she's doing right now as we speak, and won't even finish until about 3 hours before the open to generate the next set of statistical probability. All right, Andy, I think I've pretty much made my point here. I don't want to eat up all your time.
All right, yeah.
Ready, I'm going to pass it back to you.
All right, and I will go over, you went over just 2 trades, right?
Yeah, just the top 2 here on risk on, I believe. Just the EXEL and the RXDX.
Yeah, I am going to go over a couple more with you guys, because I think when you, I want you to see these setups, and these are pretty much painless trades. And were there some losers today in Holly? Yeah, of course there was. You know, that's when it comes to managing risk. So obviously Holly's going to have a few losers mixed in there every day, but on the most part, I think you're going to find there's some incredible alpha opportunity, you know, if you keep an eye on her trades. Another one I like, we always talk about on support, these contrarian indicators where you can find a really good risk reward situation. So I'm going to pull up this SCCO that happened this morning, and I'll expand this out a little bit. And I thought this was a beautiful. You got a stock that you know, pretty much gaps up and comes down pretty hard with the opening, and Holly picks it up right there. You know, on support, looking at yesterday's support, and look here on the daily. If you draw a little horizontal line right there, you can see it had some nice support going back here. So a very beautiful kind of low risk, high reward opportunity here. Now in Holly, in this trade right here, Holly got impatient because it was taking too long to work. It looked like it was going to go, and then she got out for basically reduced risk at zero profit, so nothing. But if you look here, there was not a whole lot of pain, you know, in this one. Maybe 15 cents, you know, on a percentage basis. It's a $40 stock. That's not, you know, not that big of a downdraft, and but yet, you know, it had a nice bounce here on the risk on in what, 48 cents, I think, on the close, was hiring that at one time. But nonetheless, I still want you to pay attention to these because it can present some really good opportunity. And a lot of times you can get a better, look at here, talk about getting a better price. This alert goes off and you can see it falls all the way down another 10 cents. So this is one you could have actually gotten a much better feel. Some people complain that they can't get the same feel as Holly. And trust me, we talked about it over and over in these webinars. We see many cases throughout the day where you can actually get better feels. Another one I wanted to talk about was, I believe, is this SGMO. Let me see here. Yeah, there's another beautiful one. This was strong stocks pulling back once again. It popped through a nice little 2-day range here. Look at the daily. You had a what's called a classic go, pause, go. Okay, a very bullish pattern there. You had strength followed by basically an indecisive day. You see this a lot after a big day, with, you know, where you have a huge move up. The next day, the bulls and bears kind of fight it out, and then what you have, another go day after that. Exactly what you have right here. Holly caught this on a little pullback, strong stock pulling back, and actually on this, in this case, risk off was pretty much the peak of that. But if you wanted to hold on longer, you know, you probably only had to give it another few cents. And of course, if it broke this level right here, you'd want to get out. But nonetheless, a very good trade right there, just on a go, pause, go on that SGMO. So some good trades there in Holly. And once again, I know the risk on, you know, pulled back pretty hard, but it was mostly due to that, just that one stock, which was kind of pretty sketchy there. This is one that I would have not given. I'm gonna go ahead and talk about one that after she got out for profit that did not work, and it would have been this right here. And I look at a daily like this, you have a stock that basically went up about, oh gosh, what is that? 100%. So yeah, if I'm jumping in this, I'm keeping it pretty tight. So, and you can see there, yeah, it rolled over there, and a pretty thin stock, and of course that killed her risk off today. But nonetheless, I need to address it because it is part of the risk. It will go down and marked as you know, the risk on P&L for the day. All right, there's somebody had a question. Let me get to that. Who was that? Bill asked, how do I know, who was it? Somebody wanted me, yeah, Mark, will there be any instructions on how to use the TI regular channels? Yes, Mark, I will take the time to just kind of show you what the channels are. Okay, these are our channels that everybody has access to, okay? Now, these are pre-configured channels. You click in them. A very popular one in the morning is pre-market. A great place to come and see which stocks are gapping up in the morning. You're going to have your up gappers, and you're going to have your down gappers. You're going to have your pre-market movers up here. These two are a top list. This is a multi-strategy. Anyway, these cannot be configured, okay, or changed. You can take an alert or a top list and go in here and configure it however you want, but you cannot save it to the channel. The channels are proprietary and they're in stone. You cannot alter those at all. They will always be the same, okay? But you can go in here and make changes if you wanted to, and do whatever you want, and then take this and save it to the cloud. You could save this to the cloud like that just by clicking the save button, and then you would have a copy in your cloud that you can migrate to any layout that you want. But we have several different themes here. We have a short squeeze channel, an alpha predator channel. This is, of course, is our Holly channel, a popular one. Surge, you know, a lot of them are self-explanatory. Surge is going to be stocks that are moving, thrusting higher on good volume. But a great place to go if you're new and you're getting a feel for our alerts and our top list, and you can always go in here and look in the configuration. I tell people, you know, this is a great place to go look to see kind of how we build some of these alerts, and you can check out the configurations, and just a great place to hang out when you're new, because what you're eventually going to do, you're going to build your own default layout like you see on my screen, and that's going to be the place where every time you fire up your software, you're going to come to. But that doesn't mean you can't come over here at any time and, hey, I want to see what the metals are doing. You know, maybe you see a strong sector. Oil today was very strong. All right, so maybe you want to come over here and find the oil channel. And where's she at? We got an infrastructure channel there, active traders. And tell me where it's at, Jamie. Let's see. Oh, anyway.
I'm sorry, which one are you looking for,
Energy.
Andy?
I think it's called energy, isn't it? Don't we have an energy one?
I kind of thought we did. We've been changing things up, you know.
Yeah, we may have changed things up. I'm pretty sure we do somewhere in here. There it is, energy.
Yeah.
So, yeah, so you look over there and maybe you see energy is real strong today. So maybe you want to go take a look at the energy channel and see what's hot, see which stocks are moving, you know, racing high, you know, forward. So a great way to, if you're new, to check out and get a good taste of the software is through our channels. And then after you've done that, you want to go back to your layout. Just click on default layout and it will pop up. Forgive me, guys. For some reason, when I share my screen with GoToWebinar, it really slows down my bandwidth. I don't know what it is.
Hey, and Andy, when you
all right, guys. With the go ahead.
When you get that channel back up or your layout, we had a question regarding top list, right?
Okay.
Like, how is the top list different from an alert window? So when you have a brief moment.
Sure. Absolutely. That's a very good question. Okay, an alert window needs what is called an alert. The squeeze 52 down here is an alert window. So it needs an event. Okay, that's what an alert is. It's alerting you that, hey, there's been a new high hit, there's been a new low hit, there's been a 25% pullback from highs. So it's telling you that something's happening. And the way it does it is with a timestamp and a price. So you see these in real time as they come through your alert window. Okay, so if I right click in here and I go to configuration, you are going to see at the top through the tabs there that select alerts. There's a place for an alert window. In this case, it's a new high. There you have it, an event. Okay, the difference between that and a top list is a top list does not have an alert. So if I go to this trend change lubricant or trend change pro here and I hit configure and we look at the tabs again, you're going to notice there's no place to select alert. That tab has been totally removed. So there's no event in this top list. It's only filters. Okay, you can also tell by the colored background. The filter will always have a purplish or a light blue filter color to it. So once again, nothing but filters, no alerts. And what happens is any stock that meets every one of these filters, not just 1, 2, or 3, it's gotta meet every filter set in there, or every filter in the whole set to come through the alert window. And a top list refreshes every 30 seconds. Okay, it's not going to do it now because these things are set to close when the market live during market hours only. Okay, so this, when you have a top list, I mean, you want it to be set at that live during market hours, because what this does, it lets you do nightly scans. So now I can take this Trend Change Pro and I can go through stocks and see, this one's looking pretty good there on the daily chart, breaking out of a, potentially breaking out of a trend right here, maybe one to watch. But anyway, that's the gist. That's the difference between the two. An alert needs an event, needs to have a new high, a new low, a crossing above or below, something that will actually trigger for you a timestamp. This multi-strategy over here, these are two alerts. I don't actually have the alert column here, but you don't have to have the column. But anyway, these are alerts. Multi-strategies can only be alerts. There are more than one alert in one window. A top list, you can obviously only have one top list in one window. But did that clear it up for you? The difference between the two?
Well, for me it did, Andy, and I'm pretty sure it did.
Well, good.
Question.
Okay, yes. He says it does. He says it does. But yeah, there's definitely benefits to both. Okay, one's not better than the other. The way I look at it, if I'm looking to catch things in real time, I really like my Extreme Volume High-Low Pro. There was, you know what, I'm going to go ahead and finish out on this topic because I'm probably not going to have time to present my my little thing. But don't worry, I will do it next time, guys. It'd actually be better for me to work on it a little bit more, because I want to show you guys, some opportunity that came through here this morning. So what I'm doing here is just basically running a history on today in my Extreme Volume High-Low Pro, and I am going to go to right around the 9 o'clock. I'm trying to teach patience to people and not try to feel like you have to go diving into the market right when the bell rings, and how you can kind of sit on your hands and wait maybe 30 minutes as you look at all your top lists, look at your sector analysis, kind of absorb the market. When you start staring at screens as long as I have, you can get a good feel of what's happening out there just by observing the first 30 minutes. Okay, so let's say right here, even though Hymex went, I'm not going to cheat, even though it went through earlier. Even if you waited 30 minutes and you think you missed a big move in Hymex, you can see there it went off at 971. There was still a nice 30-cent move, in that later. And I'm trying to show people, because a lot of people think Extreme Volume High-Low, oh, that's just a day trading momentum scan. I need to find things that I can hold for multiple days, that I can swing trade. This can be one of the best alerts for swing trading. And people think just because it's doing huge volume, it's running real hard, it's only a day trading stock. I'm not going to go back and do history, but I don't have time. But I'm just going to show you a few stocks that come through here lately. Juno, I know it's a biotech, but I'm trying to make a point. Went through right here on this day. Didn't, just a big gap up, didn't do a whole lot of trading, just kind of put in a spinning top. But look at the subsequent move the day after. Just explosive. Gilead the other day. I actually sent this to somebody because he sent me a question to our email saying, do you have an alert that would have found Gilead right here? I said, sure I do. I sent him this high-low, but look at this markup, and that's basically right, I think it went off right around there that day. But even if you didn't catch it at first, you chase it a little bit, you're nervous because you're thinking, oh man, I got to jump in and get my 20 cents. Man, this thing could have, another $5 or $6 in it. So these can be very good for, look at this RXDX. You talk about double confirmation. Remember Holly? Holly was in this. All right, we'll look at this alert, you know, kind of caught it. This might be
I
one
love
that
it when
has
that happens. I like it.
Don't you like it? Yeah, and you get that double confirmation there that Holly. That you,
Holly just did it, and now it's
Mhm.
going to be one of my other windows. I mean,
Yep.
statistical
Absolutely.
probability with other goodies attached to it. Can't get any better.
Yes, Neil, I will drop it in there. I will definitely drop it in there. There's one other one, I think. Let's see, was it iPixel? It had some extra juice on it, 2140. Yeah, that had about another, yeah, it had about another 60, 70 cents on it. Another chart, once again, you know, it's still running into some stuff over here, but still over the last year, I guess, or close to a year, it's breaking out. Could have some extra steam. So anyway, do not discount these momentum alerts as only day trading alerts. These can be great multi-day holds. And if I had time, I could show you many more examples if I went back. You know, NVIDIA is one of my best ones. I'm going to end with this and bring Steve in. You know, NVIDIA, and it's going to show you on the daily because this happened a while back right here. I mean, the day after earnings, gap up. Look at the, I mean, even if you just held it for 4 days, you know, it would have gone from basically 116, 117 all the way up to, you know, 136. So even if you're doing the swing scalping that Steve and I used to do for Ditto Trade, you would have had some huge. So once again, guys, look to those momentum alerts for multi-day holds because they can be great ones. Well, Steve, if you're out there, I am. Yeah, I'll save my last little thing for the next one. Maybe I'll work on it a little bit more anyway. I probably could, and I'll bring
Yeah.
Steve back in here and
Okay.
let him finish us out.
I am here. You know the drill. Just put it on the right slide. Thanks everybody
Mm-hmm.
for tuning in. Just a quick reminder, we do have a Trade Ideas podcast that is recorded every Friday and then Friday afternoon uploaded to your favorite podcast store. Honestly, the easiest way to find it is just do a Google search for Trade Ideas podcast, and whether it's Apple Store or whatever, you'll find a good return, a good reply on where to download that Trade Ideas podcast every Friday. And next slide is probably going to be our promo code. There it is. The promo code for this webinar is all capitals, Sunrise, SUNRISE. If you use that at checkout, in all caps, the promo code will give you 15% off your first month or year of Trade Ideas. And there's also a quick breakdown for you guys of the standard version versus the premium. Basically, the premium is going to give you access to the artificial intelligence and the back testing and price alerts. But the standard is still a great idea for people who know what they want and just want to have simple alerts, customizable. That's the way to go for that one. This webinar will be recorded again. I'll have it uploaded to the Trade Ideas YouTube channel hopefully in a couple hours. Check back soon. If you need to get a hold of us, the best email is generally going to be the info@trade-ideas.com. If you have a message header, you can put that message in there and we can route your email to the correct question, whether it's accounting or a development or a feature request, or to one of the traders as to how do I configure this to make it better. Anything you need, send it to info@trade-ideas.com. The phone number at the bottom generally is going to be a phone call back to you when available, but use that for accounting. We do have a live chat bubble window on our live website at the bottom right during market hours where you can come in and get live chat support on account or technical issues as well. Follow Jamie at QuantBot on Twitter, and myself is at TodayTrader on there at Twitter. Both of us try to put out real-time actionable ideas during the market, especially some of the stuff Jamie went over earlier with the compare accounts and range-bound stocks. If you're following QuantBot, you're going to get some heads up in real time rather than hearing it here in hindsight. So appreciate all of you showing up. Once again, info@trade-ideas.com is the best way for initial contact. And don't forget that promo code if you decide to want to sign up and get a one-on-one session as well. It's very well worth it. All right, guys, good job. Thank you so much. That's about it. I guess we'll see y'all next week. Yeah, you got something you want to say?
Yeah, one last thing, Neil. Just send an email to Andy@trade-ideas.com, and I will get you that link, and I'll also get you a lot of others. So I'll send our PDF to you. So
Cool.
Thanks, everybody.
All right.
We'll see you guys tomorrow at the 3-hour Friday support session.
Yep. Totally informal. Just show up. And questions and answers abound. We'll see you guys later. Bye-bye.
All right. Bye-bye.